Today, we are going to start off with a new chapter, that is final accounts. Children, before we proceed further, we need to know what is the purpose of preparing these financial statements. Financial statements, children, are prepared primarily for the business owner but may be used by any interested third party with the owner's in consent. Now, why do we need to have these financial statements from the point of view of different people who are related to the business? First of all, from the owner's point of view, owners need to know what returns were gained on his investment, that is profit or loss. Buyers need to know if the business is a profitable going concern. When we talk about investors, children, they need to know if it is worth the opportunity cost. From the banker's point of view, children, or the lender's point of view, we need to know if the business is able to repay the debt and interest. From the creditor's point of view, the creditor needs to know if they can recover their money if the business liquidates. Taxes, children, have to be paid by the business, which are calculated and paid onto the government treasury. Now, children, these financial statements are sometimes referred to as final accounts. Financial statements, children, constitute three things, that is trading account, profit and loss account, balance sheet. Now, before we proceed further to any of these, we need to know what is trial balance and how does it function. The trial balance, children, is a list of all the balances in the ledgers at the end of the period in review. That is, it is used and has two monetary columns, that is debit and credit. The debit column of the trial balance, children, displays the assets and paid up expenses, that is A stands for assets and E stands for expenses. A plus E is on the debit side at the date of review. The credit column of the trial balance, children, displays the liability and the income gained, that is L plus C, at the date of review. So, children, we can say trial balance formula is A plus E, which is equivalent to L plus C on the credit side. Now, children, once a trial balance is prepared, a businessman wants to know the profit or loss made during the accounting year and the financial position of the business. In order to ascertain this, the final accounts or financial statements are prepared, which we had talked about include the trading account, the profit and loss account, the balance sheet. Now, let us talk about the trading account. The trading account and the P&L account, that is the profit and loss account, children, are prepared to know the results of business operations, that is net profit or net loss during a given period. Whereas, children, when we talk about balance sheet is prepared to know the financial position of the business at the end of the accounting period. All these together, that is trading account, profit and loss account and balance sheet, together collectively they are known as final accounts because they are prepared at the end of the accounting period. Now, talking about the trading account. Trading account, children, is defined as an account which is prepared to ascertain the gross profit or gross loss of a business, concern for a given time period. Gross profit or gross loss, children, is the difference between actual sales proceeds and the cost of goods sold, including direct expenses. So we can say, children, gross profit is equal to net sales minus COGS plus direct production expenses. Where, children, net sales, I have mentioned over here, is referred to as total sales less the sales return. The other name of sales return is also called as returns inward. Cost of sales is equal to cost of goods available less closing stock. Cost of goods available is equal to opening stock plus net purchases. And when we talk of net purchases, children, it is equal to total purchases plus carriage in less purchase return. The other name of purchase return is returns outward. So at times, children, in the question, it may be written as return inward and return outward. Do not get confused. Return inward is sales return and return outward is purchase return. The direct production expenses, children, are the manufacturing expenses, which means the cost of procurement of raw material, converting them into finished goods is all included in it. For example, freight, carriage, wages, factory rent, fuel and gas, etc. are all examples of the production expenses which are directly related to the manufacturing. Gross profit, or as percentage of the sales turnover, indicates the efficiency of the business. Now children, when we are talking about trading account, some key features of the trading account are: it is a nominal account. Why? Because it includes the expenses and incomes. It is prepared on the last day of the accounting year. It represents, children, kindly note, the first stage of the final accounts of a trader. It contains, children, the items of revenue nature only. No item of capital nature is included in the trading account. In the debit side, children, record of cost of goods sold and all the expenses related with purchase of goods is mentioned. Sale proceeds of goods are recorded, children, on the credit side of the trading account. It contains, children, items related to the current year only. Its closing balance, children, indicates the gross profit or gross loss. The credit balance represents the gross profit and the debit balance indicates the gross loss. This gross profit or gross loss is transferred to the profit and loss account. Now children, when we talk of trading account, it is very useful as it enables a businessman to calculate the ratio of gross profit in sales. Now children, this is the specimen of how a trading account is made. Trading account of Messrs. So and so for the year ending on dash dash dash. So on the debit side, children, we have particulars amount, and on the credit side we have particulars amount. On the debit side we write to opening stock, then we write to purchases less the purchase return, then we have all the direct expenses to direct expenses. Say if there are wages, carriage inward, freight, import duty, gas, fuel, octroi, lighting, factory expenses, coal and coke, oil and grease, all these are recorded in the direct expenses, children. After this, if And on the credit side, if we go, we have buy sales less the sales return by closing stock. After this, we calculate both the sides. If we get a loss, we put it on the credit side by gross loss, and the profit is recorded on the debit side, that is to gross profit, which is being transferred. Both of them, they are transferred to the profit and loss account. Now children, the trading account, when we talk of, has all the expenses, I repeat, which are directly related to the manufacturing. Now children, when we talk of the trading account, it includes all the manufacturing expenses. Now when we prepare the trading account, children, we have opening stock, purchase and purchase return, direct expenses, sales and sales return, closing stock. Now let us know why we need to put the opening stock. This opening stock, children, is the closing stock of the previous year. In the first year of the business, children, kindly note there will be no opening stock. In trading concerns, children, the opening stock consists of finished goods only. But when we talk of the manufacturing concerns, it consists of raw material, work in progress, finished goods. So children, opening stock, kindly note, is the first item on the debit side of the trading account. Purchase and purchase returns. Purchases, children, include both cash and credit. Purchase of goods. Purchases are recorded, children, on the debit side of the trading account after deducting the purchase returns. Now, the purchase returns are deducted from this. We should be careful while calculating the purchases. The goods in transit, goods purchased on hire purchases, goods distributed as free samples is all part of it. Direct expenses, these include, children, manufacturing wages, carriage inward, power and fuel, factory lighting, heating, factory rent and rates, factory insurance, etc. Sales and sales return. Sales include, children, both cash and credit sales. Sales return or the return outward, which is the other name of it, are deducted from total sales and net sales are credited to the trading account. Children, when we calculate the sales, we do not include, kindly note, the sale of any fixed assets, goods sent on consignment and goods sold on approval. Kindly note, in the purchases also, any kind of purchases by the proprietor for his own use, cost of goods received on consignment, goods in transit, goods purchased on hire purchase basis and goods distributed as free samples are not included in the amount of goods taken or purchased by the proprietor. Same is the case for sales also. It does not include sale of any fixed assets, goods sent on consignments, goods sent on approval. Now when we talk of the closing stock, children, it means the goods which remain unsold at the end of the accounting year. Closing stock, children, is valued on the principle of cost or market price, whichever is less. It is shown on the credit side. When we talk of the opening stock, children, it is written on the debit side and the closing stock, children, is written on the credit side. And kindly note, this closing stock is also shown as an asset in the balance sheet. Why? Because, children, it is the goods which are unsold, which remain unsold at the end of the accounting year. So children, this is how trading account is made. So children, today we have covered brief introduction of final accounts, the purpose of preparing these final statements, and we have also covered about the trading account. In the next video, we would be covering about profit and loss and balance sheet. Thank you. Have a good day. Please clear your doubts over the Microsoft Teams related to the lecture recorded today. Thank you.